Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss. I don't even know what it costs.
Hi, good morning traders. I am the Conscious Day Trader, or Yanis is my real name, and today I'm going to break down another successful day that we had on the pound dollar. We were long. This is the 10th of January. The trade happened literally minutes ago. I closed the positions, and now I'm going to break down exactly how I found my bias, how I entered, how I exited, and we're going to show all that in just a second. But what I really want you to do is make sure you subscribe to this channel, as it helps me and motivates me to make more content like this. Also, down the line, we're going to do some live trading, which is going to be exciting, and podcasts, a lot of things coming up. Make sure you like it, the video as well. So let's jump on to our, first of all, the MT5. This is the 5%ers. My funded account, $125,000 and $404 profit today. As you can see, when you see small profits, such as the $20, that means I'm not closing that for profit. I'm just repositioning that trade. I always only have two positions live at any moment. So let's jump onto our trading view. Well, this is going to be our live data. Someone in the comments, is it Jaden? I think it was Jaden, asked me about these boxes and how do I put them on. I've mentioned them in previous videos. This you can find on the indicators. So they're called FX market sessions, and this is where you can click and put it onto your chart. And the way you can edit these, you can see you've got the historical data on there. If you double click on the FX market session, you can change if you want to see the previous historical sessions and the time zones, the kill time zones that I've got for London and New York. You can also add a Tokyo session if you want, or you can manipulate these to do whatever you want with your trading and how you trade the markets. So let's go and look at how we identified. You're here to see what how I traded this morning and how did I make the $404, did we say, during the London session. And let's go on the daily, because that's always where, with ICT, that's where you create your bias from the day. And you have to do two things. Also, always put your previous daily high, previous daily low. And if you remember, if you've been following me previously, my previous trades, we did talk about this sell side liquidity, and I believe it was last week when I mentioned that this market will want to come and sweep this area, and it did to the T, swept that area, and then the next target would have been down here, but we discussed that target is quite far away. It would have been 200, so a couple of days away. The other option would have been on last Friday's session to see this market come in and sweep in this area on the top here, which is also 200. So you had those two options, and we did mention that this buy side liquidity again would be getting filled, and this buy side liquidity, I'm convinced that this will get filled. So we have nice areas where we can target. And why this area? If I were to quickly remind you, if you haven't seen the previous videos, if you look at this, we've got a really nice fair value cap on the daily. Let's get our lovely box and put it onto the wick to that there and extend it through. That fair value gap has still to be filled. So then, and the market is quite close to it. So algorithmically, it makes sense. We haven't got big news today. Makes sense that we want to come and sweep this area of buy side liquidity before it wants to do something else, or whatever the target is for the following weeks or following days. So that was my bias. I thought that this area, we were trading when it opened the market around the equilibrium. It would make sense after fulfilling this buy side liquidity that it would want to be pushing up. So I was looking for longs. Something is quite interesting, we were discussing this morning in the Scruffy squad, which I'm a part of. If you take that Fibonacci level and place it on the top there, look at that, 76.4 and 61.8 are the areas of the previous daily highs, and also the area where the buy side liquidity sits in this fair value gap. So these are areas that confluence that will give you more confidence that this can push towards the upper side. So let's take that fair value out to make it a bit cleaner. If you haven't put these lines in, what you do with ICT trading, always go to the previous day, attach the previous daily high, previous daily low. Equilibrium is the 50% of the move. If you're wondering what these black lines is, I'll touch base and tell you what they are and when we go down to the hourly. And why is this buy side liquidity? Because we have all these areas here that's been touching, and if you go down the time frames, you'll see there's multiple confirmations that this would be a nice area where recreational traders would trail their stops going short. If this is all foreign to you, I would recommend you go to the ICT 2022 mentorship. That is literally the only thing I've looked and studied from ICT, fair value gaps. He has a huge library, and I think he's a brilliant educator. If you get angry with his monologues and you switch off, you're just losing that opportunity to learn so much. So make sure you check him out. It's Mentorship 2022 on YouTube, obviously for free. Now let's go down. We've got our bias, we're long. Let's go down to the hour like we said. And the reason that first black line was there is if you go back in time, we'll see these equal highs here, which are previously circled, and they were looking, these ones here. Equal candle, the top end of the wick is exactly on the pip, and you have this second area here where the market would want to sweep and take the liquidity out. So that was one area that I was targeting above here. Now if we go into the London session and let's go on the replay, we are on the replay, so let's go on to London session, and we are at 8 o'clock, and this is where the area, let's go a bit further back just so I can show you exactly where I entered, and that's 7:30. I started looking at the market at 7. I did all my analysis, found out that I'm going long, and now we're looking for an opportunity to enter. What do we need to enter the market? We need a fair value gap, we need a break of structure, and we also need a Judas move, which means we're going long. We want to see the price coming down because we want to get discounted prices. Where is the discounted price? Is around equilibrium and lower. How far can it go? We don't know, but as long as we're trading at equilibrium or below, we are happy that we're getting a discounted price and our idea is valid. As you can see now, the price at 7 o'clock, someone could argue that you could get in with the reason of this fair value gap being filled. And we can see how nice delivery that came in. There's no other fair value gap here on the 15-minute. As we break it down, actually I'm lying, that is the one identified and I've labeled there. There's a 15, on the 15-minute, there's a fair value gap. Let me just zoom so you can see that, because some people say, how do you identify these fair value gaps so easily? From that wick to that wick, there's nothing that has been filled. That wick should have been all the way down to this part if the order was filled. Same with these two wicks here, that wick and that wick. So I should adjust it a little bit. That's an area where either side there's no wicks or candles, so the price will want to come and fulfill that order to allow buyers that miss that move to become like me in this case, to have an opportunity to trade in. And as you can see, that price came in really nicely, fulfilled that fair value gap, and I was waiting for that move to come even lower to give me an opportunity to hit that fair value gap, hit equilibrium, and then we're going long. So let's see what happened. Crashed through the fair value gap. So this is where I was interested, and obviously I don't just jump into the trade. Now I got fulfilled. I need to see a shift of structure, I need to see a break of structure, shift of sentiment, a lot of words, that this is going long. Where would my target be? on that buy side liquidity that we've identified on the top there. How much could that be if I took that position from the bottom to the top? We're looking at 40 pips. If you're looking to get 10 to 20 pips, that's a really good trade. So let's see when did that trade became active? As we can see, we're on the 15 minute. When I'm looking for the entry, I always trade the 1 minute. And as we can see, that move, it was coming down, down. Equal highs here, if we zoom in, that's a nice area where the market is potentially going to come and break on the top side. And it did. We had that move there, came all the way down. And now we're looking for that fair value gap to be filled. And where did I find that fill? I didn't see any fair value gap here. So I was waiting. And we identify that fair value gap there. Okay. Now, why that one? We had a break of structure on the top side, and I missed, potentially I could have got in on that fair value gap there. I missed that, so it came down. I did not want to see this break the lows of the previous swing low. So I was waiting to make sure that this is a confirmed move. And if you can see, it just tipped to the pip on the previous 15-minute fair value gap. So it's almost like broken the fair value gap, come to retest the top side of the fair value gap, and now it's breaking on the upper side. So I was waiting for this price to come back down, give me an opportunity to get in here. I did get in on this candle here. So that's the area where I entered. So it came all the way, broke all the way up, created equal highs here. That's more confirmation that the price will want to go and break that for the buy side liquidity. So I entered my first, let's put a little drawing on horizontal array. That is my first original entry. And as you can see on the one that says $20 profit, I would have repositioned that to get a better price. And let's see where I entered the second time. We had a break of structure there. Brilliant. And now we've got another fair value gap here, which you can see with the gray line. So I was looking for my second position because I always trade with two positions. Let's see how that gets filled. And there we go. That's the second position there. Entered on my second entry. Now we've got our two positions and we want to see that run. And where would we want to see it run before we take profits? Into that buy side liquidity area here. Okay. Keep going. Price trades all the way close to the buy side liquidity and then comes down. So this is where I want to get a better price. This is where I position. That's what I was talking about previously, Yanis way of it's almost like a hybrid of Scruffy madness and my own sort of management. I like to close a position on the top and it decreases my exposure, because at the moment if I have my stop loss here and I have these two trades, if I'm wrong and that market comes all the way down here, I've got to deal with two positions. Whereas now what I want to see is an opportunity where I can get in lower, and that provided that when it starts breaking down. So I would close that position when it comes and hits on the high, and I'll show you what I mean. There, so if that goes into a little bit of profit, I would close it because I thought that this is going to come and retest lower, so I can get a better price as long as we're not breaking these lows. And as we can see, I would have taken 20 profit of that. So my better price that I was able to get was from a fair value gap fill, which was on the left side here. You can see we had our original entry here, crashed, got my $20, came down, got a better price. So now I reposition my entry into that area, and I've got a better, if you want to call it risk reward, is more of a sort of a what I'm willing to pay for this trade. and that's my sort of stop there in that phase. Okay, nine sort of pips to make on the top of the buy side liquidity 24, and if I wanted to go to that top highs, 28.6. And that's how I traded this morning session. If this confuses you, let me know in the comments, because I always reply, and if I can help, I try to do so. And this is, or you can always go and do the ICT concept. Make sure you like these videos and subscribe to them so you can get all the new updated features that I'll be coming out with, and podcasts, sort of live trading. And if you have queries about how I understand the ICT concept and trade it, also let me know, and I'll make sure to give you some tips in the right direction. Also, make sure you follow the Scruffy Trader, because he's the reason I have managed to become more consistent, and I would definitely recommend checking out his channel, or even joining the Discord. We have meetings every morning. Brilliant guy. He's now in Jamaica for holidays, so he's living the dream. And yeah, catch you next time. Tomorrow is Wednesday. Luckily, we didn't have any news today. We'll check tomorrow, and we'll do it all again. See you next time.
Run it.